Hello smart money traders, you're welcome back to the channel. In this video we're going to go into the very basic of ICT silver bullet trading strategy. ICT himself said that this strategy is able to give you a lot of aha moments and you can confidently quit your 9-to-5 job if you simply master this strategy. So I'm going to go into the very basic of this strategy. Let's listen to what ICT actually said about this strategy.
All you have to do, write this in your journal right now, okay? For you to quit your fucking job, all you have to do is find something that repeats every day that can yield you 5 handles. Here's the easiest, most straightforward ICT lecture. Ready? Watch price in the morning between 9:30 and 11 o'clock. Wait for price to run through a liquidity above or below. Don't even have a bias. You don't care about a bias. I want to see an obvious run above a high or relative equal highs and then reject that. I want to see an opposing liquidity pool. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, as soon as it trades into fair value gap, I'm using that. I'm putting a 5 handle stop loss on it. And I'm waiting for it to rip. 5 handles, half my trade's coming off, and then I'm waiting for it to trade in the opposing liquidity. There it is. And in 90 days, I'm quitting my fucking job.
Yes, you've heard about everything he said about this strategy. And for me to get it for you in a simpler way, I've actually outlined all the details and information he mentioned in this simple slide you can see here. So there are 4 major important things you need to know about this strategy. The first thing is time. This is the first element you need to understand about this strategy. And then secondly is liquidity. Thirdly is the modalities that are involved in this simple strategy. And then thirdly, you talk about money management. I'm going to show you everything about this strategy. And to even make it more interesting, ICT actually said that you don't need to worry about daily buyers once you can master this strategy. So let's get into this simple strategy and then we talk about how you can use it for trade entry. Then we do back testing. Now, I've actually made the first video on this simple strategy. You can simply find it on my YouTube channel. Come to playlist. This is the first video. It is actually a very powerful video. I've seen a lot of comments from people actually appreciating me for making that video. So let's get back to this one. So the first thing is to talk about time. Now, you need to know that this strategy only works in the New York session. And the New York session, you're going to focus on New York session 9:30 a.m. and 11 a.m. You're going to focus majorly within that time frame. So to get your time zone set on New York, you simply come to this place. If you have TradingView, come to this place where you see my cursor. You can see time zone, click on that, and then simply scroll down to where you see UTC -4 and then click on that. This is the first thing you will need to do. And then the second thing you need to do is that you have to drop to the 1 minute time frame of any USD paired currency. So basically I use this on USD paired currencies. You can use it on indices such as S&P 500. I've not tried it on cryptocurrencies, but I will make more videos showing you how this works on different assets. So once you've gotten that, the next thing to know is how you can use this strategy. So the time we said is 9:30 to 11, the intervals. Sometimes you can use 10 a.m. to 11 a.m., just the interval. So the way this works is that once you have your time interval, let me just show you in an example. If you have something like this, let's say this is 9:30 and then this is 11 a.m. 9:30 a.m. New York session, 11 a.m. New York session. What you want to look out for is you want to see price behaving like this. Remember, where you see major levels creating places where you can possibly find liquidity. Okay, now as price moves from this level to this level, this level to this level, this is basically how price moves across different sessions. Okay, Now, what you're going to look out for is to look out for the most recent areas where you can see liquidity. Now, there are major key levels where liquidity resides, and those are old highs, old lows, relative equal highs or relative equal lows in form of buy stops or sell stops. Now, what you want to look out for is this kind of levels, the most recent levels. Now, look at this. Above this place, you're going to actually find liquidity. This place, you're going to actually find liquidity. Even this place, you can find liquidity. So above old highs, below old lows, or relative equal lows or relative equal highs. These are the areas you can literally find liquidity. So once you look at these areas, as price comes to 9:30 a.m. New York session, you want to see price comes into this level and begin to behave in a way that you see a sudden either grab of liquidity around this area, and then price had a major comeback into that range, okay, into that range, and have a complete market shift around this area, okay, and have a complete market shift. This is a complete market shift we're talking about, this place. So this place can be called a change of character. For some of you that call it a change of character. So this is areas where you can see change of character. Now, once you see this change of character and this sudden displacement, you want to focus on return to institutional reference point. You're going to focus on premium since you're dealing with a bearish movement now. So you want to see price come to a premium. So what ICT said is that you want to focus on fair value gap. Any fair value gap he sees around this area, that is where he's going to focus on. Don't worry, we'll soon go to our chart and verify how true these things are. Now, this is the target, this fair value gap. So if we go to our chart, we're going to verify them and see for ourselves how effective this is. For me, I'm going to start focusing on the most recent liquidity, the opposing liquidity according to ICT. Those are the areas you want to focus on. Let me show you that on that slide. The most recent liquidity area. Let me just expand this. The most recent opposing liquidity, I want to focus on that. Now you can see we've actually talked about all the elements that make this strategy. Wait for a clear change of character or complete shift in market structure. 9:30 or 10 a.m., whatever time you want to focus on. 10 a.m. I think is perfect. 9:32 is good. You can use either of those ones. So let's get to the chart and do it right away. So this is Euro USD 1 minute time frame. Let me go ahead and take out every single drawing right there. We're going to go into the chart and see it for ourselves. So having this right here, the first thing I want to show you so I can give you a simplified way of getting this is to come to where you see indicators, click on it and search the indicator called sessions on chart, this particular one. Click on it. After clicking on it, you're going to have it on your chart. So what you're going to do to have it perfectly set for you, then come to where you see settings right here, click on it, then take out London and Tokyo. You want to leave only New York session. After that, you can come to where you see New York session, click on it and leave it at 9:30. That is the best time for that, 9:30. So you're going to leave it as that, and then here is 11 a.m. Either 9:30 or 10 a.m. either one you want to use. Now you're going to have this indicator help you to just mark out those levels for you. Now in the next video, I would like to just use MetaTrader 4. For those of you that are basically using MetaTrader 4, I will use MetaTrader 4 to show you more examples in the next video I'm going to do. So make sure you subscribe to watch that particular one. So we're going to go ahead and do that immediately. Now let's get into looking for those areas and backtest them for ourselves to see how reliable this strategy is. Now look at this, the most recent one I have on my chart, Euro USD. I'm going to use this on Euro USD. You can try it on any asset for yourself after watching this video. Now look at this, the most recent one. I'm not seeing anything that looks like what I just explained. So this is something you should also pay attention to. You're not always going to see this every day. But if you can find these 2 or 3 times in a week, I think that's good for you to take trades in that week. So let's go back and see if we can find any. So look at this. Let me see if I have a setup in this. So this is the previous day, apart from that day I just showed you. So let's look out for this same thing we explained: Euro USD 1 minute time frame, and this is what we have. Now the most recent areas where we can find possible liquidity pool. Now look at this. You can mark out those areas. This is area where you can probably see liquidity. This is area where you can actually see liquidity too. So this area, and then this one, this has not entered here. So this is possible place where we can see liquidity on the sell side, whether buy side or sell side, according to the rule. They said liquidity identify the most recent 1 minute buy side or sell side liquidity price has created before New York session 9:30 a.m. and 11 a.m. and wait for liquidity run on either side of the market. It doesn't matter which side the liquidity run happen on. So we come back here. Now what we're going to look out for is to basically look out for liquidity run on these areas. Can you see? And then we have a change of character or shift in market direction. Now after marking this, sell side liquidity is this area. This is sell side liquidity, this place. Then this is buy side liquidity, and this is also a buy side liquidity. As price came here, we had this grab of liquidity and it moved above here and had a grab of liquidity above this highest level where we see liquidity. So this is the most highest level where we can see liquidity pool. As price grabbed liquidity above that area outside the 9:30 and 11 a.m. What do we look out for? Now we patiently wait for a change of character. That is to have a complete shift in direction, because this is a mini uptrend. What that means is that we have a higher high here and we don't have any higher high. We don't have any higher high since from this last high. We want to see a complete shift. So this is where I see a change of character or complete shift in market structure. So that is an indication that I'm about to get what I was looking for. That's wait for a clear change of character or a displacement. Look at what happened, a complete change of character. If you can't identify this, you can use this indicator, come to indicators and search for smart money concept by Lux Algo. Click on that. You're going to find it easier. So this indicator will help you to mark it out. Can you see change of character? This indicator also gave you those areas clearly without any stress. So this is a change of character. So if you can't identify them, you can use that indicator. Now after getting that, what do you think you can do next? Is to basically wait for price to come back to that particular fair value gap we're talking about. So let's look out for that fair value gap. Now for you to wait for price, you're going to see 1, 2, 3 candles are coming back to that fair value gap. So this is the fair value gap, that creates that change of character. So if you're looking out for that, for you to validate that, if you measure this from here to here, that fair value gap is at premium. That fair value gap is at premium. So we're going to use that fair value gap for our trade entry in this regard. So let's look out for that price to come to this fair value gap. If you don't know what fair value gap is, this is what fair value gap is. Can you see this candle? 1, 2, 3. This 3 candle. The wick of this candle and then the wick of this candle. This third one. In a 3 candle price action, I have explained fair value gap time and again. You can watch out for my other videos to learn that. So this 1, 2, 3, anytime you see 3 candle price action, you want to see that the wick of this third candle and the wick of this first candle are connected. That is a healthy price action. But if you have a gap between them, that is what is called a fair value gap. Like you can see here, can you see 1, 2, 3? Can you see the wick of this third candle and the wick of this first candle are actually connected? So this is a healthy price action. But when you see this gap, it is actually an imbalance that price may possibly come and fill up. So this is why price came back to this area and filled up this place, and this is your entry. So this is exactly what Michael Hudson said, any fair value gap at all, this place. So basically, I'm trying to explain this to the very basic. Liquidity grab above here and a change of character as price came back to this place. This is the highest liquidity we are seeing here. This is the lowest, highest and lowest as price kept grabbing liquidity. Those are the areas we want to focus on. So as price came to this place, our first take profit, remember the most recent liquidity, the opposing liquidity, and then we can expand it further. So this is what happened at that area. Middle of this fair value gap is called consequent encroachment. You can choose to take it from the first place or maybe here as soon as it starts coming into the fair value gap. But I would like to keep my stop loss just sometimes just here, either above the fair value gap, and then if I see that I can manage this, I can take it even up to this area. 1:1 is okay for me sometimes. 1:1 just to stay away from trouble above this place, the highest level here. Then I have that. So I'm taking this step by step so that every one of you can understand what I'm doing. So this is basically what Michael Hudson said. So let's get to other place and see if we can see another entry again and try to look out for that. So look at what we have right here. Another example, guys, another example right here, another example. So look at this, the most recent liquidity area, this place, this area, and this one. Okay, before 9:30 a.m. and 11 a.m. These are the things we're looking for, remember. So you can check it here. Identify your New York session 9:30 a.m. and 11 a.m. or you can use the 10 a.m. if you wish to use that. So now what next do we look out for? What next do we look out for? As price came, had a grab of liquidity above here, starts moving to this area. We have not had any change of character here as price came here to this place. Now let's go to indicators and look out for it. If you can't find your change of character, you can use this indicator by Lux Algo. They actually did a wonderful work for you. So can you see any change of character from Lux Algo indicator? No, you cannot see. So you only have break of structure. Where is your change of character? This place. So this is a change of character. Now you prepare to see price come back to the fair value gap of interest. So this is the fair value gap that we're looking out for. This place, and this place. Now there is something you need to pay attention to. This is a strategy that is done on lower time frame. You're not paying attention to any bias, whether daily bias or weekly bias. So this is an entry. You're going to enter here. You're taking your trade from here. So this is the importance of stop loss. So my stop loss is basically somewhere, let me delete this guy, is somewhere around here basically. To me, I want to see that my stop loss is above either an old high or old low. So as price comes to this place, notice how the bodies of this candle did not pass this other block. Can you see this other block? Notice how the bodies of this candle, if you can put your line from here, the bodies of those candles did not pass the body of this other block. So this is an indication to tell you that this is not going to pass that area. So sometimes I can even take my stop loss to this place. Yes, because this is a lower time frame. Now if I use MT4, we're going to look at the effect of spread inclusive so that we can have a better way to do that. So this is your entry. Your entry is going to be here, your take profit, these areas till this level. So basically when you use this is how you're going to see it, guys. You can try it for yourself. Go ahead and check it. I will make more videos on this same strategy, explaining it to the very core basic detail, and then every one of you can try it. I will do the one on MT4, and then I will do a separate video back testing it from past data. So this is all about this video. I don't want to go into far explaining this. We can go on and on back testing this, but this is enough for now. Let's see if we have other one that we look out for. Can we try this? If we can try this and see for ourselves. So the most recent is this area. and then this area. Can you see this place? So run on liquidity, price came, okay, came back inside. We did not have any form of change of character that we are going to use. So this is not a day for this strategy. So we just avoid that. It's not a day for this strategy. So sometimes you just take it out. It's not every day you trade. That's the beauty of trading. I don't take trades every day. I take trades once in a while, maybe twice or thrice in a week. I want to stay healthy. My mindset is healthy when I take trades. If I take a loss, I just avoid trading for that day till the next day. So guys, you can try this on and on. If you have questions, let me know in the comments. I'll be right there to answer you. Thank you guys for watching. See you in the next video. Thank you.